Hi everyone, welcome to the next decade. We hope you've enjoyed your holidays and are getting ready to settle back into work for the year.
We'll be back on the air next week, but until then, enjoy part 3 of our favourite moments from the Australian Stock Market Show in 2019.
Well, let's get into it. We've got some emails to get into now, so but otherwise we'll
on
be
a
here
more serious note, is it?
That's on a more serious note. So we've got some emails we need to get into, and the first one is from Matt. So, but thanks for sending your emails in, guys. It really is good, and sometimes it explains a little bit more than you can put on the chat. So, but Matt said the first one, as I said, somehow I actually missed his email last week. He actually sent it in. And for some reason, it went into that I couldn't figure out where it was pile. Okay. And then I found it today, and I went, so therefore, Matt, sorry about that, matey, but I will do your email right now. Matt says, I'm interested in your opinion on Codan, which is a stock ticker code CDA. So it has been on a tear. Now, I reckon that must mean it must be going up pretty fast. Currently in a pullback. Also, Xero has been sideways for a long time. Currently look like close to breaking out on a daily and weekly levels. I have read your book, Accelerate Your Wealth. I bought the US version by mistake, but I figure the info is the same. Yeah, it is. And a lot of people are buying the ebook version, I suppose, of your electronic version off Amazon, and that's if it's got green writing on it, that's the US version. And the same stuff, it's just using the stocks from the Dow to apply on the work, where the Aussie book is using the top 20 stocks in the Australian market. Now, he says, I note in your book you talk about uptrends for 3 months. Trends happen in multiple different time frames, maybe from days, weeks, months and years. So it's about, there's 2 things I talk about all the time. One is content and the other one's context. So you've got to keep everything within context. So just saying a trend is 3 months may not be saying it in the right context, and it just depends on what kind of portfolio you're managing or you're wanting to manage or what you're doing. So we need to keep it like that. The book is more about medium to longer term trading, not short term stuff, so therefore we've got to keep that in that context. But he goes on to say Xero would be classified as a pullback for 2 months on a long term uptrend is why I'm interested with the possible breakout, possibly on daily to continue the long-term trend. I'd forget the word daily and take it right out of your sentences, matey, because daily is next to useless to you as a trader. And I'll say that again, and most people might be shocked at this. Daily charts are next to useless to you, and taking signals on a daily basis are pretty much next to useless to you as well. So good traders don't use daily charts very often because they are very inconsistent and prone to false triggers, and that's why most traders get it wrong. So, but especially for long term and medium term, you don't need daily charts at all. He's interested in my thoughts, and I like your YouTube videos and analysis on there. It's great. After reading the book, I'm now looking to close my managed fund, which is nice. He's got a separately managed account and reinvest in his own scans and look at the charts and take control of his own life, which is fantastic.
Done, Matt. Good on you.
It's great to see people taking control of their own life, and we are going to bring up the stock for you. So just grab up that portfolio, the watch list that I put it all in. So you've got all that, and you've got to put it on the right stock. It's CDA on the left. Okay. And then I think
So look at that. I mean, it's just taken off like a rocket. So back here we saw this sideways consolidation, and sideways consolidations can actually be a precursor to a significant growth. Now, when the stock actually traded above this point here, it was a signal that it was at least going to go to the all-time high and possibly through it, which it did really nicely. So let's have a look at how far it actually appreciated from that point. So if you'd actually picked it up when it was going to break out, you'd actually have a nice profit of about 70%. So that looks interesting, doesn't it? Looking at I just want to have a quick flick across to the weekly chart. Let's just have a look at we should be able to get volume in there somewhere, and have a look at the volume on this stock. We can see there the huge spike, and that was one of the reasons why I wanted to show you this, because it actually rose so strongly and the volume was going with it. So that's often a really good sign that, if all the traders are behind it and the volume keeps rising, that's telling you that it's going to keep rising after that point, more than likely, to continue to make a high. But eventually the volume will drop off as some of the profit takers come in, and the share price will come back. So I would say that looking at this, it may be getting close to a point where it's going to come back for a few weeks, given it's just had such a strong rally and given what the volume's showing. But notice how low the volume was prior to all that happening.
It's almost non-existent, wasn't it?
Yeah, so that's one of the things you watch out for. And we don't use volume a lot in trading because with medium to longer term trading, it's not so important. But with the short term trading that we look at, its volume can be very helpful in picking up these moves and allow you to get in on them. So well done if you picked up that one. At the moment, if I was looking at this stock, I wouldn't be looking to enter it at the moment. I'd be looking to preserve what I had.
No, you're right, and it does look a little bit indecisive at the moment, but it could just be taking a breather for the next move up. But that's why you put your stop losses on it. So,
yep, and we've got Xero as well. So Xero, similar thing. We can see this breakout that unfolded on Xero, a different shape though to the one that we saw on CDA. So that's something to it's really important that you learn a lot of these pattern and recognise the patterns and recognise the momentum behind the shares and what's going on, because some of these patterns can be false triggers. Now, I'm not saying that in the case of this stock it is, but it looks like one of those typical ones where it'll break out and then come back later on, and try to come back into the angle of that rise. So we could see that occur in the short term, a bit of a pullback before it tries to take off.
It's going to change personalities in my mind, because now we're talking about a stock that's around $70. So
well,
all of those
it's getting
people
towards
that like to buy
$100,
cheap,
isn't it?
Yeah, it's going to change.
They're not looking at
personality.
it anymore.
No.
But they're not necessarily the ones that have the big money to drive it anyway.
No,
they
don't, but they're the ones that would have driven it earlier on in the piece and taken that spike out at 2013. So they were trying to drive it then. So at this point in time, when it's $70, you're going to get a different type of investor or trader into it.
It's an interesting thought, though, isn't it? The fact that when stocks get to a higher dollar value like that people turn away from it because they think I'd rather buy a stock that's 60 cents and I can get more of them.
Isn't that stupid?
Yeah, there's just no logic there, because you're talking about percentages here. We're not talking about how many shares you can buy.
Yeah, it's not like buying ice creams. It really isn't. It's like how much money you're going to make, and that's really what people don't do.
What made you think of ice cream?
I love ice cream, but I'm not allowed to eat it at the moment
because
I've got to lose
really
some weight.
Weird? Like we spend too much time together. We do because actually we haven't lately, which is unfortunate. But we, because I was actually thinking on the way here that I was going to have a bit of a chit chat at the start about my favourite ice cream, because someone was talking to me yesterday about Ben & Jerry's. Do you know Ben & Jerry's ice cream?
No, I've never had it.
Yeah, it's really nice ice cream.
It's not Aussie, so I'm having Aussie ice cream.
But you can get better Australian ice cream anyway.
I know you could.
However, they sell these things that are like, they're little, like a little cake covered in chocolate. So it's like an ice cream round disc.
Oh, yeah.
So, yeah, but that is particularly yummy, I'd have to say.
That sounds bad for you, yeah.
So you just thought of ice cream and then I just went with it.
I know, sometimes
Maybe
we wear
can
the
have
same
some ice
colour
cream on
just
the
by
show
not
at
knowing
some
it.
stage.
I know, we're
Maybe
not
we
doing
get some sponsors.
Just read the next question, okay?
Why did you decide to get educated in the trading?
I think the key from there is I see the trading as it is a hobby, but it's also my future. And I believe that if you're buying and selling ultimately without the education, it is a form of throwing your money over the table. And for me, it's why I wanted to get educated is I believe that I've had some fabulous luck, even though it's been through lots of research. I've had some fabulous luck, and I don't want to risk what I've earned now moving forward. I want to keep going on that trajectory of profit, and through education. I'm spending a lot of time reading and research, so why not put it into education? Get some structure in place through the technical analysis side of things, and then have comfort and minimise the amount of time wasting that I'm probably doing with reading and doing too much fundamental analysis, putting some really good structure in place, and having comfort that I know what I'm doing is taught through education, not by luck.
So when you decided to look for an educator, what did you do, and what was really important to you in finding that educator? Or what traits did you want from that educator, and what was of value to you?
I do, and I think you covered it a bit in your in our earlier discussion around yourself and Janine. You're a great complement. Your differences are a great complement to each other. So it is about yourself and Janine. That was why that got me thinking through your YouTubes that maybe we need to take it from being information to education is one of the things that you say, and it just that resonates with me as well. So I just felt that why spend money? And I suppose my sister and I had looked at a couple of information sessions. And I thought, well, they sound great, and I've been to one or two, but I'm not sure I walk out any of the wiser. I just feel like I've walked out with some tips, but not necessarily the tools that I need to trade. So that was probably the most recent decision. And coming across your YouTubes, then I'm thinking, well, hang on a minute, I need to take it from information to education, and what's the do I want to and I had to look within, because it is a commitment to move forward on that, but it literally, that was a split-second decision. Yeah, absolutely. Education is where I want to head, because I do see that it's for me, I'm not dabbling. I see this as a hobby that I want to do ongoing, and I want to turn it into more of a profit-making hobby.
Got a message from SJL. It says, "Hi Dale and Janine, wanted to say thanks to Dale. In August, you were brutally honest about AGH. My friend bought at $1.27 in July, sold the next day after analogy for 90 cents. Current price 40 cents.
Would you like me to look at that?
No. Well, you can. Oh, well, there it is.
Exciting. Come
on. It's exciting. It's exciting, but that's really what we're talking about earlier when we're talking about the short sold stocks and people trying to catch falling knives. And this is really why we say to stay out of stocks like this, PLS stocks. Stay out of stocks like this, because more often than not, this sort of stuff will happen.
It's a dream breaker.
It is, and as I said, a lot of people turn good trades into long-term buy and holds, never getting anywhere, and they're wrecking their portfolio. But thank you very much for the comment.
So look at that. Look how far it rose.
Yeah, massive.
You know, a huge rise and a big fall just about wiped out that whole game.
But people are thinking that's going to do that again, and that's the thing, and that's the mistake, the gentleman's making on PLS. He's making the mistake that just because something happened, it's going to do exactly the same thing again and make him a lot of money. And it's not necessarily going to be the case. Now, the question I've got is from Craig. He said, "Hi Dale and Janine, would like your thoughts on the strategy of getting out of a stock based on two bearish signs on the weekly chart, where one is due to the whole of market downturn like last week." Now, my answer to that is not good enough. Two bearish signs in 1 week doesn't tell you to sell, and especially given it's a reaction to a market, that's not. And what is the bearish sign? Because a lot of people say to me, actually I had somebody say to me today on YouTube saying there's a doji, and I went, and as soon as I read that, not being rude to the person, I went, yeah, big deal. But people think because they see a doji or a candlestick reversal that the market's going to turn around and melt down, or it's going to go the other way, and it's not. Candlesticks are like very short term, and that's all they are. And a lot of people don't understand that dojis in certain places have more strength than dojis in other places. And so this is that whole stuff about that lack of education. That person might have bought in to that stock too early, seeing a doji. And sometimes when you see people asking about, here's this rule that's broken on the weekly chart, and we go, well, why would you buy that there, or why would you sell that there? Because we're using a lot more rules and a lot more knowledge and a lot more confidence in what we're actually doing. And so that's where we're getting better runs. And so we position trade, so we run the trade all the way to the end, from the start to the finish. Now, we're not buying at the top and selling at the bottom, and we're not buying right at the very bottom and selling at the very top. We're taking the big safe chunk in the middle and let our profits run. So, but let's get into this stock, which only is, what are we looking at?
Emeco Holdings, EHL.
Who was that by?
That was by Jack. Okay, thanks very much, Jack. And we're looking at a stock that was in its heyday, up around $12, and is now trading at $1.90 or thereabouts. Now, that really puts things in perspective, in my opinion, and think about this when you're trading the lower end of the market. So looking at EHL, you can see it appears to be finding support now. But this recent move down on the market actually pushed it below the 30th of August 2019. So, while it may have been finding support here the first week of September, now we're seeing a real test of the support, because it just goes across the chart. It's not just at that point. We can see, and this is why it's really important to look at the monthly chart, because if you're just trading short term and you're looking at this, then you really have blinkers on. So you're not seeing the strength of this level. Now, if that level was broken, well, it could be heading all the way back to below $1, similar to that other stock we looked at in terms of back below an important level. So, but at the moment, it might find support, and if it happened to trade above this level around here, this 213, then it would really start to look interesting again. But
We've had a lot of new interesting stocks, haven't we, that tonight that we don't
normally get from viewers.
I love seeing these stocks. So I'm going to give you another question because I like to break up the stocks with some questions.
Okay.
So that we're not always just talking about a stock. So now I've got a question that I've left to nearly the last bit because I thought it was probably the best question of the night. Now, it's from somebody, I'll just pick it up. It's from Jesse. He said, "Hi guys, how does capital gains tax and discount, 50% discount after 1 year, affect your decision to sell a stock? If I should sell now, but am 2 weeks away from capital gains discount, should I wait, etc.?" But he doesn't tell me the stock code.
Right.
So you can answer that one.
It's interesting, isn't it? Because as an individual looking to establish a portfolio and come up with a strategy, you might decide to incorporate that thinking into the strategy that you choose. Because you might be looking for a strategy where you're holding stocks for, 9 to 18 months and attempting to hold them through a 12-month period. Now, the only challenge that you've got with that is you can expect more volatility in the share price if you do look for those sorts of strategies because, you might be trading more on the monthly chart, medium to long term, to be able to do this and not get a lot of exit rules triggering.
I'll see if he's given me the stock.
With the capital gains rules, we don't actually look at, that's not our focus, looking at the tax side of things. We're more focused on, can we find a good strategy that's going to get a good return over the long term and medium to long term, and then making decisions based on whether it meets our targets for growth, etc., rather than looking at the tax side of things, because we can't look at individual personal circumstances to understand how that would affect an individual from a tax perspective as well. Have you got any other comment you'd like to make on that?
Really, on that is to me it's about you plan, because sometimes we do go over that 12-month period, and it's more of if it's going up, stay with it, and if it's going down, you might be trying to get the discount, the 50% capital gains discount, only to see a lot of your profits erode by holding on to the stock. So it's one of those things, do you hold it, do you not hold it when you get this close? And if you're 2 weeks out, it's getting to that point, you're like, how much is it going to fall?
But see, an individual who doesn't have the experience analysing shares has got no way of knowing whether that stock's likely to fall strongly or not. So that's one of the things that we do check, is just to see whether when it's getting, like Dale was saying, if we're looking to sell a stock, we do ask the question, is it getting close to that 12-month mark? And if it is, then is it close enough that we could actually, manage the share without risking too much on the downside?
The things you can do is, if you've got a broker that's got, let's say, CFDs, and you've got access to the CFDs, you can actually take a neutral position by shorting the same amount of stocks, or shorting CFDs to the appropriate amount of your stock, which puts you in a neutral position for 2 weeks. Basically, if the share goes up, the CFD value goes down, and if the share goes down in value, the CFD value goes up, and there's a little bit of holding costs over those 2 weeks. So that's like a hedge that you can have on it.
But an investor who has no experience in having managed a share portfolio and done it successfully would never do that.
Well, no, the broker would help them do that. So it's pretty low risk, that sort of stuff, but somebody would help them do that.
Because they could end up being, worse off.
Well, you're not going to be, you're in a neutral position. How can you? That's the point. You're if the share goes up, you're making money, and if the share goes down, you're still making money.
Well, what happens if the stock goes ex-div?
Well, then it's just a little bit more, but you've got to look at, if it's a small position, like it's only $1,000, I mean, it's not really worth it, is it? If it's a $100,000 position, it's a whole different ballgame.
You just need a really good broker then, if that's what you're saying.
Yeah, but I used to do that, we used to do that all the time with options. So often you do that around options time, with capital gains tax and all that sort of stuff. You just go into a neutral position, it costs you a few bucks.
Yep.
And some holding costs, and you do that. Other times you'd actually do, like around tax time, you prepay
prepay the interest.
Prepay interest on some things, whether it's you borrow money to buy options to long dated options, and there's a whole range of different tax strategies that you can use depending on who you are and how big your portfolio is. So we've probably got a lot we talked about that's probably going to get a bit too in depth, a bit too technical.
All right, now the next one, Zoe. Fantastic to get a lady on. Is that why you put my name on this one?
Yep, absolutely.
Yep, giving me the ladies. That's great. Hi, Dale and team. Portfolio, medium, long term. That's your portfolio. Growth and income is your strategy, I gather. Oh, look, this is exciting to see someone who's actually thought about this.
I told you, you're going to love this question.
Yeah, it was right in my ballpark.
Absolutely.
I'm mostly invested into blue chip shares, another tick. I'm looking to buy Coles, so I'm not so sure, but what are your thoughts? Reason, it is currently on a strong positive uptrend, 8 months, okay, good. She's looking at for trends, that's awesome. Coles Group has a higher ROE than the average 10% in the consumer retailing industry. You're losing me a little bit on the fundamentals.
Return on equity.
Yep. Coles has established a 5-year turnaround plan with the aim of not cutting dividends, restoring profit growth and maintaining market share. Now, that news on its own actually did help the share price of Coles. Coles forecasts that the company will return to profit growth in 2021 by slashing $1 billion in costs over 4 years. Geez, I mean, I've known people who've worked at Coles in the past, and I'd hate to be working there under that circumstance.
If they're cutting $1 billion, yeah.
Just not going to be pretty. 4 years and slowing the opening of new stores to focus on online and convenience avenues. Thanks heaps, Zoe. By the way, look for Australian made, Australian owned, and a product of Australia when you go shopping at Coles.
Oh yeah, that's hard to find. I find it I'd sit there reading the labels. I can't find much.
I make a huge effort to do it. It's really important to me.
I do an effort, but I don't shop much at Coles anymore. I go everywhere. I go to local supermarkets and the IGAs a lot more nowadays.
Oh, okay, that's fantastic. Yeah. Going for the independents.
Yeah, I know. Well, your frequent flyer points at Coles, it's like you can buy an ice cream. That's about all you can get after about 5 years. So, yeah. But anyway, okay. So let's answer the question.
Don't you want those little plastic toys?
No, I don't want that. No, you can keep your plastic toys.
I don't want them either.
So go to Coles.
Okay, Coles. We've got Coles on there, and you can see the monthly chart's looking fantastic at the moment. It's had a good run. Look, I think there's still a potential for a bit more upside with the Coles share price. However, I wouldn't, if you weren't in it now, then I wouldn't be picking it right now, because I think we're going to have a little bit of a pullback, and then I think there'll be a further run up on the Coles share price. We could see it get to sort of around the 16.20, 16.40 mark before it then has a bigger, slightly bigger turn. But looking good on Coles at the moment. If you've got it, you'd be just running with it and using a trailing stop loss to manage your downside.
Yeah, and I'd also be careful on a lot of the news that companies put out news that they want you to hear all of the time. It doesn't necessarily mean it comes to fruition. And talking, saying, what we're going to be doing in 2024 or 25. And
well, the market starts to factor it in if they think it's really going to make a big impact on the share price. It's already factored in, so the share price goes up, which is what we've seen happen.
Yeah.
And then the mums and dads hear about the shares doing really well, and they hear about this news after the fact. And so that's when the mums and dads are getting in, which is, I'll show you on the chart, that's where mums and dads are getting in right here.
Right at the end of it, yeah.
Whereas the institutions are getting in down here.
And you've got more competition coming into the market still with the supermarket. So there's a lot of things happening in the next 2 to 5 years in this space.
Oh, it's big in Australia at the moment. I don't know. I actually don't believe in competition for competition's sake, just to continue to try to make things cheaper and cheaper for consumers and then totally blow up our whole industry. I just don't agree with the Competition Consumer Commission's whole process of that. It needs to be a balanced perspective.
No, I'm agreeing with you, because it's there's more. If there's more supermarkets, there's more jobs, but that's only part of the equation, isn't it? Really?
Yeah, it's not just the jobs. It's trying to make prices more competitive for consumers, which is fair enough.
I hate the home brand type stuff.
I
really do.
Yeah.
I'd rather support.
I want choice.
Yeah, I'd like to pick up. Yeah, you go to Coles and you try and find a packet of pasta, and it's all just home brand pasta. Yeah, but sometimes it's like hard finding the ones that you want, or the brands you want, and that's why I go to these IGAs and other thing now, and local fruit and veggies and the local butchers, because you got better service and you got more friendly people and you can get what you want. So anyway, but that's my beef.